Good morning, everyone. Welcome to Prebell with MarketSmith India and TraderSmith India. Okay. Before we go ahead into this podcast, I like to state the disclaimer very clearly. Registration granted by SEBI, membership of BISL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It's very important to understand the Nifty's price volume action to gauge the market and to also have a short-term view on the markets, how market is going to place for a week or more than that. So for that, we have taken Nifty's daily chart from our website, and you can see here the short-term momentum is on the upside very clearly. On the long term also, for the last 3 months, Nifty has been advancing higher consistently, and it has found support at its 21 DMA. Whenever the 21 DMA was tested around 3 to 4 times, Nifty found support at that level. That is a very positive sign and a very constructive sign for the Indian markets. And if you look at in a slightly shorter time frame, that is for the last 10 trading sessions, out of that around 8 trading sessions, Nifty has closed in the green territory, and which is a very positive sign. Also, one should be very cautious as well, because Nifty is not going to advance on each day. There will be some pullbacks happening in the market. This is not new. This is seen everywhere, and in the historically also, if you see, there will be slight pullbacks when the rally is going on. So the such slight pullback can be expected in this upcoming week as well. But when the pullback is happening, please be watchful for the 21 DMA, because that level will be a very crucial level for the index. And however, if that level is breached, then it will be further selling might happen, where most of the investors who have taken positions recently will try to break even the positions, or investors who have taken positions long back, they will also try to book some of their positions. So such profit booking kind of scenario might be seen going forward, because Nifty has advanced very sharply. Coming to the market structure, according to O'Neill lens, we are still in a confirmed uptrend. That is, we have very recently changed the market structure to confirmed uptrend when the Nifty made a new all-time high. However, prior to that as well, even though when we are in rally attempt, we have been adding stocks to model portfolio. And if you are following our model portfolio, you would have seen the number of additions we have made and the returns we have generated for the last in the last 3 to 4 months of period. We have clearly outperformed Nifty and mid-cap indices both. And going forward, we'll be tracking weakness in the market by looking at the distribution day count. A distribution day is a very crucial tool in our methodology. Whenever Nifty declines 0.2% on volume higher than the previous session, that indicates some selling pressure in the market. And when such a thing happens, we'll count it as a distribution day. And accumulation of distribution days will show the weakness, increasing weakness in the market. And upon distribution day count reaching around 3 to 4 and Nifty reaching 21 DMA, then we might change the market status to uptrend under pressure. Until then, we will be continuing to be staying in the confirmed uptrend. Some of the stocks which are in news and which will be under radar in the today's trading session, I'll start with the JK Cement subsidiary, JK Maxx Paint has acquired nearly 20% stake in one of the paint companies called as Acro Paints for a consideration amount of 60 crores of rupees. Titan has come up with their June quarter update. The revenue is seen at a 20% growth at year-on-year basis, and whereas the jewelry business is seen at 21% growth. During the quarter, the company has added 68 stores, including Carrot Lane, and with these addition, the current company's portfolio of retail presence is at 2,778 stores. Dabur, again, it has recently acquired a company called Badshah Masala. So for this company, the overall Dabur and this recently acquired company, the growth is seen at 10% for the June quarter. And international business, they're expecting a strong growth, at least in double digits in terms of constant currency. So both the companies have given positive updates, and both these companies are expected to be trading higher in the today's trading session. Another major company, Praj Industries and Indian Oil Corporation (IOCL) have formed a joint venture. This is this is to build biofuel production capacities in India. Shobha, which is a South India-based real estate developer, has also come up with their numbers for the June quarter. The company has recorded nearly 28% year-on-year basis growth in terms of total sales to 1,465 crores of rupees. In terms of sales, this is the highest sales for a quarter. Whereas the sales volume has increased to 2.6% year-on-year basis to 1.39 million square feet of area. During the quarter, the company has constructed nearly 624 homes of an area of 0.97 million square feet. Coming to institutional activity, in yesterday's trading session, FIIs have bought heavily. They have given good support for the Indian markets, whereas globally markets are not doing good. They are in turmoil, whereas India is doing very good. So foreign institutional investors are attracted towards India. They have, on net basis, they have bought more than 2,600 crores of Indian equities. Domestic institutional investors, on the other side, took this as an opportunity to profit book some of the positions. They have sold nearly 2,300 crores of Indian equities. Coming to the global markets update, overnight US market closed in the negative territory. You can see Dow Jones closing 1.1% lower, S&P and Nasdaq closing 0.8% lower. Asian markets are also trading in the negative territory. Nikkei and Kospi, Shanghai are trading 0.4 to 0.5% lower, whereas Kospi is trading in deep negative territory with a decline of 1.5 to 1.6% of loss. So global cues are definitely on the negative side. We have seen both the US market and Asian markets trading in the negative territory. Whereas GIFT Nifty, which is a newly started index, which we are tracking instead of SGX Nifty, it is indicating a slightly muted opening for the index. If the global cues come into the market and the investors take the bearishness, then we might see some kind of profit booking happening in the market. But overall, there is not a major weakness in the market, so it might be a profit booking kind of session. So major selling is not expected because there are no major macroeconomic indicators which are indicating sell-off happening in the market. For the chart of the day, we picked Kirloskar Ferrous. It is in our watch list, buy watch list. The reasons are many. The stock has very good set of ratings. EPS rating of 97 indicates a very strong, fundamentally strong company. Return on equity is also very good at 22%. Our threshold is around 17%. So that is also ticking the box. Price strength is 84. It has come down slightly because the stock is not able to break out. It has retraced towards its 50 and 21 DMA. So there is some slight pullback happened in this particular stock, but that happened on a lower volume. That is a positive sign. So that is the reason RS has come down slightly to 84, but still 84 is a very good rating according to our methodology. Accumulation distribution day rating, that is A by D rating, is at B+, which is also considered fair enough for addition. Overall, on ratings wise, the stock is looking very good. Number of funds, you can see it has shown consistent growth in the last 4 quarters. And each quarter, the company is able to attract new institutional funds, which is a very positive sign. So on most of the aspects, it is looking good. the stock comes to its ideal buy range, that is the blue highlighted area, and also volume picks up, then we might consider for addition. That is, we might consider for addition, but we already have a set of stocks in our portfolio. So we might book out a few stocks which are moving sideways and look for stocks such as blue breakouts or blue alternative buy points. If you have this stock in your portfolio, you can keep 50 DMA as a stop loss because it has found good support at this level. A couple of points below that level will act as a stop loss. Then I can consider holding it from there. Thanks for joining today's pre-bill. Have a good trading session.